Hello, my dear students. Let's add value to your knowledge account today. I'm Dr. Bharati Sunil. Welcome to today's class on journal entries part 3. In the last two videos on journal entries, I've explained you various entries. In this particular video, I will explain about purchases and purchase returns, sales and sales returns, and compound entries. Here in this video, you will understand the difference between simple entry and compound entry. Let's get into the topic. Here you can understand compound entries and simple entry. What is the meaning of simple entry? Means only one debit is there and one credit is there. When we are paying rent, what we are writing? Rent account data to cash account. We are writing rent account data to cash. So how we are writing rent account data to cash account? Means only one debit is there and one credit is there. It's called simple entry. Okay, what is compound entry? Why you will write compound entries? Say for example, if you are having different transactions on only one day. Say for example, for compound entry, we are paying rent, salary and interest on the same date. So instead of writing three entries like rent account data to cash account, salary account data to cash account, interest account data to cash account, what we'll do, we will write one compound entry, means debiting 3 and crediting 1. So that I will explain in the last entry. So in this way, if you are writing more than one debit or more than one credit, it is called what entry? It is called compound entries. Have you understood the difference between simple entry and compound entry? Okay, we'll go into the problem. So before doing problem, I will explain you golden rules of accounting once again. There are three types of accounts. You have to understand three golden rules: a real account, personal account, and nominal account. Real account means what comes in and what goes out. And personal account, receiver is to be debited and giver is to be credited. See, in real account, debit what comes in and credit what goes out. And in personal account, debit the receiver and credit the giver. And in nominal account, debit all expenses and losses and credit all incomes and gains. Now we'll see the first transaction. On 11th January, purchased goods from Rohan rupees 50,000. So what is the entry when we are purchasing? What is the entry? Purchase account data to cash account. But here the word cash is not used, but name is given. When name is given, you have to understand that it is credit transaction. Means, say in one transaction, if purchases are made by giving cash, what entry will write? Purchase account data to cash account, right? If purchases are paid by giving check, then what entry will write? Purchase account data to bank account. But here we have not paid cash, we have not paid check also. But we have purchased by taking some time to make the payment. That means it is called what transaction? Credit transaction. So we'll pay amount to Rohan after some period. Means it is called credit transaction. So what entry you will write? Purchase account data to Rohan account. So on 11th, we have purchased purchases account data to Rohan account. So why we have debited purchases? Because purchase is expense according to nominal rule. That is why we have debited purchases. Why we have credited Rohan? Because who is giving us that goods? Rohan is giving. Giver is to be credited. So that is why we have credited Rohan. So what is the narration? Being goods purchased from Rohan. What is the amount? 50,000. 50,000. Clear? Next we will take another transaction. On 12th, sold goods to Raghu for rupees 45,000. So we have sold goods to Raghu. means Raghu name is mentioned, means here it is also on credit. So we also gave time to Raghu to pay that amount in future. Suppose if it is cash sales, how you will write entry cash account data to sales account. Suppose if you have paid amount through bank, then what entry you will write bank account data to sales account. But here no amount is paid either through cash or through bank, right? So that is why when we sold on credit, what name we have to write here? The person who is buying from us, his name we have to write here, means to whom we have sold our goods, his name we have to write here. So what is his name? Raghu. So Raghu account debtor to sales account. Is it clear? Next, what is the date when we have sold? On 12th, and amount is 45,000. So 45,000 and 45,000. So what narration you will write? We sold goods to Raghu. If you are writing just a name, it is understood that it is sold on credit basis. Being goods sold to Raghu. So we will close this entry. Next, coming to the next entry, goods returned to Rohan. See, we have purchased from Rohan. How much of worth of goods we have purchased? 50,000 worth. But because of some reason, we are not happy with some part of goods what we have received from Rohan. So now we want to return that. So how much of worth of goods we want to return? 5,000 worth of goods. So when we have purchased, what entry we have written? Purchases account data to Rohan account. But now we are returning to him. So when here purchases got debited, when we are returning, purchase returns will be credited. Always remember, purchases will be debited, purchase returns will be credited. So to whom we are returning? To Rohan, right? So Rohan account debtor to purchase returns account, being purchase returns made to Rohan. So here you will write 5,000. Now we'll take next transaction. Raghu returned goods worth rupees 4,000. See, if you see this transaction, we sold goods to Raghu for rupees how much? 45,000. Here Raghu also want to return some goods to us. So we will write entry now. So when we sold goods to Raghu, what entry we have written? Raghu account debtor to sales account. So here sales got credited. Now what we should do with the sales returns? Sales returns is to be debited. Remember, sales is to be credited, sales returns is to be debited. So what is the date? 16th. Sales returns account debtor to Raghu account, being goods returned by Raghu. Being goods returned by Raghu. Have you understood why we are crediting purchase returns? Because when we have purchased, we showed it as expense. But here, when we are returning goods, we have to show that as income, because that amount will get back. Say, for example, you have purchased one nice shirt from Amazon, right? You bought some 10 shirts. So you paid around 20,000 for that. Now, some two shirts are not fitting your measurement. So some two shirts are not fitting you properly. So what you will do, you will return that two shirts. Say, for example, the worth of two shirts is 4,000. So out of 20,000, whatever the payment you have made, again you will receive back that 4,000, right? So that is why we have to credit purchase returns. In the same way, why we are debiting sales returns? See, when we sold goods worth of how much? 45,000. But Raghu was not satisfied with 4,000 worth of goods. So when we sold goods, we showed that as income. But when the returns are made by Raghu, our income is reducing. Means what we should do? We should debit our sales returns. Is it clear? Because it is reducing our income. So that is why we have debited sales returns. So what is the amount? 4,000. Now we will see next transaction. From now onwards, what entries we are using? Compound entries. Rajendra has to pay 20,000. How much Rajendra has to pay us? 20,000. But he settles his account by paying 19,000. But how much he is paying now? 19,000. What about the remaining 1,000? It is implied that that amount we are giving him as discount because we want to get payment from Rajendra. That is why we want to settle his account. So out of 20,000, now Rajendra is paying only 19,000. The remaining 1,000 we are giving him as discount. So what is this discount called here? Discount allowed. So on which date it got happened? On 20th. So totally how much of cash we have to get from Rajendra? 20,000. But how much we are getting now? 19,000. So what we will write? Cash account debtor 19,000. Discount allowed account debtor to, from whom we have received this amount? Rajendra. To Rajendra account. Is it clear? So how much we have to receive? We have to receive 20,000. But how much we have received? Only 19,000. So how much amount we received less? That is called discount allowed to them. So 1,000. Cash account is debited. Why? Because cash is coming in. How much of cash we have received? 19,000. And discount allowed is expense according to nominal rule. Expenses are to be debited. That is why we have debited discount allowed. And Rajendra. So who is giving that amount to us? Rajendra is giving. So according to personal account, giver is to be credited. So what addition will write? Being account settled by Rajendra. Next. Business owes means our business is owing. To whom it is owing? To Ravi Traders. How much we are supposed to pay? 50,000. But we settled this account by paying only 48,000. So out of 50,000, we paid only 48,000. So the remaining 2,000 we have not paid. So it is implied that that remaining 2,000 is our discount received from Ravi Traders. So what entry we have to write? How much of cash we are paying? That is called cash is going out. How much of discount we have received? That is our income. So who is receiving our money? Ravi Traders is receiving our money. So when this transaction got happened on 25th. So who is receiving our money? To whom we are to whom our business is paying money? To Ravi Traders. So receiver is to be debited according to personal account. So Ravi Traders account debtor. Ravi Traders is artificial person. So artificial person means personal rule. According to personal rule, Ravi Traders is the receiver of our amount. That is why we have debited. So how much of cash we have paid? That is to be credited. So cash is going out. How much of amount we have to pay to Ravi Traders? 50,000. So here I am writing 50,000. But how much of cash we have paid? 48,000. So to cash account, how much? 48,000. So what is the balance amount? 50,000 minus 48,000 means 2,000. So that 2,000 we have to consider as discount received. It is implied. Suppose if it is not mentioned that 2,000 is discount received, also we have to understand that what is the difference amount that is called discount received. So to cash account, next to discount received. Why we are writing discount received? It is income. So discount received account is 2,000. Ravi Traders is receiving our amount, so receiver is debited, and cash is going out of the business. How much of cash is going out? 48,000. That is why we have credited, and to discount received means it is income. So that is why we are crediting rupees 2,000. In these two entries, these three golden rules are applied here. See, cash account is real account. Discount allowed is nominal account. Rajender, personal account. Right? In the same way, Ravi Traders, personal account. Cash, real account. Discount received, nominal account. These three golden rules are applied in these two entries. So cash account is debited. Why? Because cash is coming into the business. It is real account. Discount allowed. We are giving discount to Raghu. Means it is our expense. It is our loss, right? So that is why discount allowed is debited. This is what to nominal rule. And to Rajendra account, personal account. Because who is paying that money to us? Rajendra is paying. So according to personal rule, giver is to be credited. Now in this entry, to whom we are paying that money? Ravi Traders. So who is receiving our money? Ravi Traders. Personal account is to be debited. Next, cash account. Why we are writing cash account? Because cash is going out. So it's real account. According to real account, what goes out is to be credited. Next, to discount received. Discount received means according to nominal rule, it is income. So that is why we have credited. Next, we'll see last entry, that is paid rent, salary, and interest on 31st January. So here we will write January 31st. What we have paid? We have paid rent. All expenses are to be debited according to which rule? Nominal rule. So rent account debtor, salary account debtor, interest account debtor, to cash account. What is our rent amount? 2,000. What is our salary amount? 10,000. What is our interest amount? 1,000. So what's the total? 2,000 plus 10,000, 12,000, 12,000 plus 1,000, 13,000. So to cash account we'll write 13,000. Have you understood this entry? On the same date, we have made three payments. We have paid rent, we have paid salary, we have paid interest also. That is why we made that into only one entry. It is called what? Compound entry. So in this transaction, there are three debits and one credit. So rent account debtor, salary account debtor, interest account debtor, to cash account. Suppose on this date we have paid discount also. On this date we have paid commission also. How you'll write? Rent account debtor, salary account debtor, interest account debtor, commission account debtor, discount account debtor, to cash account. So like this we can write multiple payments what are happened on the same date as compound entry. Is it clear? So what narration we'll write? Being rent, salary, and interest paid. So this entry is compound entry for the amount to be received, and this entry is a compound entry for the amount to be paid. And this entry is also called compound entry where we have paid multiple payments on a same date. So that is why we are writing it as a compound entry. So this is about today's class. So for better understanding, please see my previous videos on journal entries. So this is our third part of our journal entries. That's all for today, but learning never stops. Thanks for watching. Please like, share, and subscribe for more and more videos. You will get more and more videos on financial accounting and also on cost accounting and investment management simultaneously. So please refer to your friends also so that they also get benefited by these videos. Thanks for watching. See you in next video.